Hello traders, Gary Wagner for Trending Markets, approximately 12 noon in Honolulu, 6 o'clock in New York. It is Thursday, October 29th. We had the U.S. equities markets quiet today, closing roughly unchanged. Dow Jones Industrial Average closing off about 23 points on the day, 17,755. S&Ps closed off a similar amount. We are actively trading again in the afternoon session. This, of course, is off the Globex. And currently, we have our Standard & Poor's E-mini at 2084.75. We did enter a long trade yesterday, got in at 2068. So a good ways away from where we are currently at. And our stop is currently sitting just below our 200-day moving average at approximately 2050. Now, as you can see, market had a tremendous rally yesterday off of the news at the FOMC meeting's conclusion. And we also noted that one thing that we have seen within the Standard & Poor's in terms of having some solid information has been the moving averages, this being our 50-day moving average in red and our 200-day or longer term moving average in green. As you know, throughout the week we were looking to enter the market, but it was a matter of timing or positioning ourselves properly. I felt we definitely saw that opportunity yesterday. And most importantly, what we did see is following this dramatic spike up last week, the first couple of days of the week, although they were slightly lower, Monday here, Tuesday here, our lows remained pretty much right around that 200-day moving average. We did move into that territory on Tuesday. However, of course, Wednesday, yesterday, we had a dramatic rise and we got in right at a proper vantage point in terms of positioning ourselves. As I said, we got in roughly at, call it 2068. Now, we will look to move our stops up, but for right now, we'll keep them here. We'll look at it tomorrow, and depending on the series of lows that we get, we'll look to put them under the lows or under these candles here, which are sitting at roughly, call it 2060, 2061, 2062. And eventually, as long as this market continues to move in our favor, of course, we'll move it into a profit stop. Right now, it's a protective stop. Now, in terms of what we're looking at as a target, we've got some real resistance, of course, at 2100. But I believe that in between where we're trading at, which is, call it 2083, 2084, we've got an area in which the market is traded actively and really doesn't give us any clear indication of support or resistance, except for these series of lows. And again, they're very, very muddled at best. My sense is over time, going in through the end of the year, beginning of next year, at some point, I really believe we are going to take a stab and test these historical highs up above 2135, call it 2140 in that area. Of course, the first area we really got to get above is this at 2125. And prior to that, 2100 is our big mark. But our last trade was quite profitable. We got in properly, but we did get stopped out when the market ran back below 2000. And so although we pulled out about 30 points in profit right in here, we really gave up a significant area of movement as this market, after finding some support in this area, really just steamrolled and rallied back through this area. And the area that I'm speaking about is the price points between the 200-day and the 30-day moving average, to where when we saw it really eclipse or take out that 200-day moving average, that's when I really believe that a long-term extended rally is probably in play. And that's the reason we took that stab. We're not going to enter any other markets right now. I want to let this work out. Crude oil is the other market that we've been following, but it's been all over the board when you consider that it came up, hit these highs at around 51, began to trade lower. It hit a low of about 44. My sense was that we would probably break below there and track through the 44 price point, maybe as low as 40. That's what I was looking for. Absolutely wrong. But we didn't take a stab at it. So my concern is not to re-enter oil as much as really see the maximum we can gain out of this. We will look to scale in more contracts if this market continues to move in our favor. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up. Bye-bye.